Hello and welcome. I'm Congresswoman Jennifer Wexton. Thank you so much for joining us for today's Public Service Student Loan Forgiveness webinar. I am so grateful to have Winston Berkman-Breen from Student Borrower Protection Center here today to discuss the Public Service Loan Forgiveness Program and how recent reforms enacted by the Department of Education last year are helping borrowers finally get the relief that they were promised. The Public Service Loan Forgiveness Program was created as a way to help ease the burden of student debt for Americans who chose a path of public service, which in many cases involves accepting a lower pay than they would likely receive in the private sector. Our public servants, including teachers, police officers, first responders, social workers, and more, dedicate their careers to making our community better, keeping us safe, and helping to educate the next generation of leaders. In order to qualify for relief provided by the PSLF program, borrowers must make a series of qualifying payments under specified repayment plans and then would have the rest of their loans forgiven. Unfortunately, that's far from what the reality has been for the vast majority of those who should be eligible. Complicated requirements, poor management has left thousands of borrowers confused and unsure whether the payments that they were making would actually qualify. When I came to Congress, I saw what was happening. I heard from my constituents about the issues that they had faced with this program, and so I advocated for reforms. Now, while the previous administration was pretty hostile to the program and refused to take actions on the reforms that we were fighting for, and even proposed eliminating the PSLF program entirely at one point, last year, the Biden Department of Education announced some long-awaited changes that have already helped tens of thousands of people get their loans forgiven. Once again, finally. I won't get too much into the technicalities of the changes. That's what Winston is here for, but I'm very excited that we have taken steps to right this wrong and make the PSLF program work as it was intended, as a student debt relief lifeline for our public servants. It will go a long way towards helping ease the financial burdens for so many people in Virginia's 10th district and across the country. So without further ado, I'm going to toss it to Winston, who has a brief presentation on the PSLF reforms, and then we'll answer questions. We have a lot of questions that were submitted prior to the event, but if you're tuning in and have additional questions, please drop a comment in the live stream, and we'll do our best to get to as many as we can. Once again, thank you for joining our webinar today, and now over to you, Winston.
All right, thank you so much, Representative Wexton, and thank you for organizing this event and for inviting us to join and participate. My name is Winston Berkman-Breen. I'm the Policy Counsel and Deputy Advocacy Director at the Student Borrower Protection Center. The SBPC is a national nonprofit organization committed to ending the burden of student loan debt for all borrowers and families in the country. As the representative said, the Public Service Loan Forgiveness Program is a great idea that wasn't working well, right? And we were very excited. It's funny when the representative said last year, I had to stop for a second. Happy New Year, everyone. We're very early into 2022, but at the end of 2021, there were some very exciting changes announced for the PSLF program that'll provide loan forgiveness to thousands and thousands, if not even more, borrowers who've been working in public service. So what we're going to do today is cover the Public Service Loan Forgiveness Program generally, and then talk about the changes. And then I'm going to give a couple of tips and instructions that all borrowers who work in public service should take to make sure they take advantage of these new changes to the Public Service Loan Forgiveness Program, which, as we'll discuss, are actually time limited. So it is very important for folks to be proactive, join webinars like this, and make sure they take control of their student loans. So I'm going to share my screen and start my presentation. I'm going to speak for about 20 minutes, and then we'll have some Q&A. All right, so Congress created the Public Service Loan Forgiveness Program in 2007 to help public service workers who were struggling with student loan debt and to make sure that future students and graduates wouldn't be deterred from entering public service because of the balance of their student loans. Put simply, as the representative said, Public Service Loan Forgiveness is the promise that if a borrower works in public service and makes payments for 10 years, the remainder of their debts will be forgiven. As we'll see throughout the presentation, it unfortunately is a little bit more complicated than that. So how the PSLF, Public Service Loan Forgiveness Program, actually works, the general program, not the changes that were recently announced, which we'll talk about, actually has 4 criteria. So more than working just in public service for 10 years, you have to satisfy each of these criteria. We're going to go over each of these, but to briefly list them now, first, you need to have a direct loan. That's a very specific type of federal loan, and there are other types as well. Second, you need to be in the correct repayment plan, which for the Public Service Loan Forgiveness Program is usually going to be an income-driven repayment plan. Third, you need to work in public service full-time, which we'll talk about. And finally, you need to make 120 qualifying payments, which is 10 years worth of 12 monthly payments. So I'm going to drill down into each of these in turn. And again, remember, this is the normal Public Service Loan Forgiveness Program. we'll talk about the special changes that are in place right now in a moment. So first, the right type of loan. Only direct loans qualify for public service loan forgiveness. Direct loans have been the main federal student loan since 2010. So if you took out a loan since then, it's likely a direct loan that already qualifies. If you have older loans, such as what's called a Federal Family Education Loan or a FFEL loan or a Perkins loan, those do not qualify themselves. What you can do, though, is you can essentially convert those to a direct loan through a process called consolidation. Consolidation is like refinancing with the Department of Education. It pays off your older loans and gives you a new loan, which is a direct loan type. That's that loan that qualifies for PSLF. Under the normal program, when you do this, you don't get credit for that new direct loan for any of the years of work you did while you had those older loans. You essentially, with your new direct loan, have to start the clock of 10 years back at zero, even if you were already working in public service in public service previously. But as we'll discuss in a moment, that's one of the things that is changing for this limited time special waiver, which is very exciting. What that means is when you change your loan type, you can get credit for the past work you've already done when you had your older loans, which we'll discuss. So the second normal requirement is that you are in the right repayment plan, which again is generally going to be an income-driven repayment plan or an IDR plan. Now, it doesn't actually matter how much you pay on that plan, just that you're in the right plan. Some plans result in what's literally a $0 payment, but it still counts as a payment. These plans go by several names. There are a handful of them. One is income-based repayment or IBR, income contingent repayment or ICR, pay, P-A-Y-E, or repay, R-E-P-A-Y-E. Some other payment plans that are listed on here on the slide in front of you can qualify in certain instances, but in general, you want to be on an IDR plan, one of those four that I just mentioned. These plans have slight variations, but essentially the commonality between them is that they calculate your monthly payment based on a percentage of your income, rather than having you pay the standard plan that it would take to pay off your loan over the course of 10 years. Now, IDR plans also generally take longer to pay off because your calculated payment may be less than that standard 10-year plan, so it just takes longer to pay down the loan. For this reason, when you're on an IDR plan, if you've been on a plan for 20 or 25 years, depending on the plan, the rest of your loan will be forgiven. Now, I mention this just because it's a feature of IDR plans, but for public service loan forgiveness specifically, that forgiveness comes after 10 years, right? So you would be on an IDR plan, but only 10 years and then get it forgiven because you're a public service worker, as opposed to the 20 or 25 years under the general program rules. So the third requirement is that you, for public service loan forgiveness, is that you work in public service, as the name suggests. The focus is actually on your employer, not on your role. So it doesn't matter what you do. It matters whether your employer qualifies. It doesn't matter what you do for your employer, just that they qualify. Qualifying employers include government organizations, so city, state, federal, and tribal, 501c3 nonprofits, and certain other types of nonprofits. For-profit organizations do not count for public service loan forgiveness, nor do some other organizations like labor unions or certain other types of nonprofits. But government and 501c3 nonprofits are categorically considered eligible employers. You also have to work full-time, which is defined as at least 30 hours a week, or whatever your employer says is full-time, if that's greater, so the greater of the two. If you are someone who works like a teacher and you don't work year-round, but you have like an 8 or 9 month contract to work for a qualifying employer, they'll calculate it 30 hours a week based on the term of your contract, as opposed to over the spread of the year. You also can combine to reach that 30 hours over multiple employers. So if you work part-time, but for 2 employers that each qualify as a public service employer, you can combine that to get to your 30 hours or above. And finally, again, you need to make 120 qualifying payments, which is payments on the right loan type, on the right payment plan, and during the correct period of employment, while you have a qualifying employer. The payments have to be made in full and on time. And if you leave public service and come back, you can continue accruing credits right where you left off. You don't have to start over. So these payments, these 120, 10 years worth of payments, don't need to be done consecutively. They just need to satisfy each of these 4 requirements. And again, this is the regular public service loan forgiveness program that's been around since 2007. So there are some impacts of COVID on the public service loan forgiveness program. mainly under the CARES Act for those loans that have had their payments paused since March of 2020 and currently through May or until May of this year, 2022. Each month of suspended payment will count as the qualifying payment plan. So you still need to have the right loan type and you still need to have a public service job, but you don't have to actually make a payment. The pause will count as the payment. So this is important to note because obviously some folks have had to change their jobs or have lost their jobs during COVID, and that employer requirement is still there, as is the direct loan type, but you don't actually have to have made a payment. The pause will count as the payment towards 120 for those loans that have had their payments paused. So that's what Public Service Loan Forgiveness Program looks like and how it has operated for a little over 10 years now. Unfortunately, as the representative alluded to, it hasn't worked as well as it should, and it really hasn't delivered on the promise of loan forgiveness that it made to public service workers. So this was a program created in 2007, and it requires 10 years of work and payments, right? So in 2017 and early 2018 is when we saw the first class of people who would be eligible to have their entire loans forgiven, the remainder of their loans under the PSLF program. Unfortunately, what we saw in 2017, 2018 was that it wasn't working well. The initial rejection rate was about 99%. Only about 800 applications out of close to 90,000 were approved. And folks were being denied because they had the wrong loan type or they were on the wrong repayment plan or for other reasons, but really that had nothing to do with whether they had worked in public service for 10 years, right, which is the point of the program. As you can imagine, this was a huge problem and an incredible failure of the program for folks in public service, especially people who took on loans, got degrees to enter public service, teachers, government lawyers, et cetera, relying on this program because they'd been told their loans would be forgiven. Congress did act to create a special fund to try to fix some of the issues, but it wasn't enough, and it still didn't help a lot of folks who had the wrong loan type, for instance, and were never told they needed to have a direct loan and convert their loan through that consolidation process that we mentioned. So that was then in the late 2010s. But let's flash forward to just a couple months ago. In the summer of 2021, the Department of Education, for the first time ever, opened what's called a request for information and really just asked borrowers to tell them about their PSLF experience. This was an opportunity for borrowers who'd worked in public service for 10 years and who, for some reason, were getting locked out of the program to tell the Biden administration what their story was and ask for them to fix these problems. Nearly 50,000 borrowers from across the country submitted an individual comment. And if you've ever done work with constituents or organizations trying to get comment letters, I think you'll know that 50,000 is a lot. So clearly this struck a chord with folks and they wanted to share their story and call for change. These letters and comments came from every walk of life in public service work. You can see some of the organizations and job types listed here, but they all told a very similar story, right, of doing important work, struggling to repay their loans, and relying on a promise from the government that had yet to really be delivered. So this was a really phenomenal response. So within weeks of ending the request for information period and reviewing the letters, the federal government announced a special waiver program that we mentioned and that we're going to talk about now that would address many of the issues raised by these borrowers who filed their comments that we started to see in 2017 and afterwards. So for a limited period of time, the Department of Education will retroactively grant credit towards public service loan forgiveness for the program for borrowers for months that previously were ineligible, that didn't count, either because they had the wrong loan type or were in the wrong repayment plan. So we're going to walk through each of these in turn, and I think you'll see why we started with the program as it normally is, so you can see what the changes are now. So essentially, what the department's waiver does is give public service workers credit towards loan forgiveness, regardless of what type of student loan they have, for any time frame since October 2007, when the program began, as long as they were in a qualifying public service job and their loan was not in default or deferment or forbearance. Even for months where a borrower didn't actually make a payment, as long as their loan was in a repayment status and they had a qualifying job, they can get credit towards PSLF. These credits, again, are retroactive, so borrowers can receive credit for past payments that were previously already deemed ineligible. So I'm just going to repeat the overview because it's really important and it can be confusing, and we're going to continue to talk about it. So, repetition is not a bad thing. In short, any month since 2007, October of 2007, that a borrower had any type of federal loan and worked for a qualifying public service employer and was not in default, deferment, or forbearance, that borrower can receive credit towards the 120 months required for loan forgiveness under PSLF. And as the representative said, we're already seeing people who've taken advantage of this waiver in the 2.5 months that it's been in effect, who thought they were locked out of this program forever, or who had to come in late in the game because someone told them they're in the wrong payment plan or the wrong loan, and they lost out on years of hard work. We're seeing these people get their loans forgiven, hundreds of thousands of dollars per public service worker. And it's really very life-changing for a lot of people. So sometimes in this work, we say if something's too good to be true, it's not true. But this is one of these examples of something sounding too good to be true and actually being exactly what it sounds like, which is exciting. But as we'll see, it's not automatic. So there is some work folks have to do. So normally, public service loan forgiveness requires that borrowers have that specific loan type, the direct loan. And although the waiver allows folks with any loan type to get credit, those without direct loans have to take some steps to convert their loans through consolidation, that process we talked about, the refinancing with the department. Non-direct loan borrowers have to convert their loans through consolidation into direct loans to take advantage of this waiver period. Now, they'll still get credit for all the work they did before the conversion, which under the normal PSLF program, you don't do that. Once you convert, you have to start the clock at 0. Under the waiver, you will do that. But they have to do that conversion step. Also, all borrowers, and some have already done this, but all borrowers will have to do this regardless of your loan type, will have to certify with the Department of Education what periods of employment they've had with qualifying public service employers since 2007. Essentially, if the government doesn't know you were working in a qualifying job, they can't give you credit for that job. So what the waiver really did is it kept in place the qualifying job type requirement and the 120 payments requirement, but it sort of is waiving the requirement that you have a specific loan and a specific loan type. Then again, there are some hoops we have to jump through. So importantly, the department's waiver only lasts until October 31st of this year, of 2022. That means that any borrower who has to change their loan type through consolidation or certify their public service work with the department must do that by October 31st, 2022. This does not mean that everyone will receive their new credit towards loan forgiveness by that date or that they have to have gotten it by that date. It just means the paperwork needs to be done by the borrower. Credits will be given out on a rolling basis. Some folks have, again, already gotten their credit or already had their loans forgiven. And the department will continue to do that process beyond this cutoff date, just to make sure it's a lot of people, they have to get them all through. But it's also important to note that this is just a cutoff date for the procedure. Any credits you get through this process are permanent. So if you get a lot of credit, but you don't get the 120 after the deadline, you can continue to accrue monthly credits towards the 120. It's just that after that deadline, you'll have to do it pursuant to the normal PSLF requirements, those 4 requirements we talked about. So the rest of the presentation will sort of talk about what you actually have to do by this deadline, because it is important to take action sooner than later. So there are 3 things that we're recommending public service workers with federal student loans do. We're going to walk through them now. So to figure out how this special waiver applies to you and what you have to do, folks should take these 3 things. We're going to do these 3 things. I'm going to talk through each of them and then have some sort of screen grabs to show you literally how you can start to do this on the federal government's website. But in short, folks should confirm their past and present employers are qualifying public service workers. That's a threshold thing they have to do. Determine that what their loan type is and whether they have to consolidate, and then consolidate if necessary to convert their loans into a direct loan, and certify their employment with the government so they can get the right number of credits. Now, first, confirm you have a qualifying employer. Nothing about the waiver changes that again. However, the one thing that the qualifying employer requirement that is changed by the waiver is that normally you have to still be in that qualifying public service job when you apply for and receive loan forgiveness under PSLF. Under the waiver, that's no longer the case. If you have 120 payments in the bank, you can apply now, even if you're retired, working to the private sector, doing whatever, and get your loans forgiven, and that's fine. That's just specific to this waiver. Normally, you have to be currently in that job. So remember, qualifying employers include government employers, state, local, tribal, federal, 501c3 nonprofits, and certain other ones, and it does not include for-profit employers. If you aren't sure whether your employer qualifies as a public service employer for PSLF, the Department of Education maintains a list that you can search, and I'm going to walk through that in a moment and show you again how to find that list. It's important to note, though, that it's not an exhaustive list, so if you don't see your employer listed there, you should still proceed if you think that they are a public service employer, eligible employer. You can access this list through the PSLF help tool on the government's website, studentaid.gov. That's, again, the PSLF help tool at studentaid.gov. In a couple of slides, I'll show you what that looks like. And this is an important first step, because if your employers aren't qualified, from whatever period of time, then the rest of the steps aren't as important. This is also on the help tool. The list of employers is the first step, so it's pretty easy and quick to access. Okay, so step 2, what types of federal loans do you have? The 3 major loans I mentioned briefly before are direct loans, which are the qualifying loans, federal family education or FFEL loans, which are not themselves eligible, and Perkins loans, which are also not themselves eligible. So for public service workers who want to get loan forgiveness that have FFEL or Perkins loans, during the waiver period, you'll want to consolidate that refinancing process to convert it into a direct loan. And again, uniquely during the waiver period, you will get credit for the time spent working while you have those older loans, but that's specific to the waiver. If you, after October 31st, 2022, if you consolidate your older loans into a direct loan, that new direct loan, you'll have to start accruing the 120 payments from scratch, from zero, even if you have a decade of public service work under you. So that's the important part of this waiver, is it gives you that grandfathered effect of your prior work. So the final step that all public service workers should take with student loans is certifying their employment with the Department of Education. So remember, qualifying employers, government, 501c3, certain others. The form that you use to certify your employment is called the PSLF form. It used to be called, until recently, the Employment Certification Form, or ECF. Some of you may have already used this ECF form. Borrowers should certify their employment using the PSLF help tool that I mentioned and that we'll see, which can help generate that form for you. And you should do it for any qualifying employer that you've had since October 2007, since that's when the eligibility for PSLF starts, when the program began. So again, in a moment, I'll show you how that works. But again, if the government doesn't know who you worked for, they can't give you credit for it. So that's what that certification process is. Some folks also sort of ask whether they should sign up or say they have signed up for the PSLF program. As I'll mention in a bit, there's never really a sign-up moment. It's just that as soon as you start certifying your employment with the federal government, that's when they can start giving you the credit. So there's not a, did I miss it, did I not miss it window? It's just a when you start to proactively tell them about what kind of job you have. Okay, we've just discussed the 3 steps in broad strokes. Now I'm going to very briefly go through a sort of screen grab step-by-step to show you how to do some of these, what we think are important first steps to take. And then we'll have some final takeaways and have plenty of time for questions. Okay, so how to determine whether your employer is a qualifying employer. So you'll need to log in to studentaid.gov. This is going to be your main portal for all your federal student loan work that you're going to want to do. So when you hover over the Manage Loans menu, which is in a red box here, you'll see a public service loan forgiveness option also in a red box here. When you click that, you'll see an option for the PSLF help tool, and you can launch that tool and log in there. So once you're in, this is sort of what you'll see. You'll see on the left-hand side of the screen, it says Public Service Loan Forgiveness Help Tool. Borrowers can look up all of their employers since October of 2007 in the help tool. You'll need your employer identification, or EIN, sort of tax number, and the dates of employment. You can again see on the right side of the screen what that looks like. You enter their EIN and then the time period that you worked for them, or if they're your current employer. You can find most employers' EINs on your W-2 or by asking your HR department, or if they're a large employer, you can even Google them. If your employer appears when you run the search, and there's an example search here for what ends up being the EIN corresponding to New York State. If you're a New York State employee, it'll confirm whether or not they're a qualifying employer. You'll see in the red box on the right that green eligible, New York State as a government employer, is an eligible employer type, and you can proceed to then step 2, check what kind of loans you have and see whether you have to consolidate. If your employer doesn't appear, it doesn't mean that they're not eligible. It just means that no one has applied from your employer before, so they don't have a record either way. If you think that you have an eligible employer, you should continue with the process, and that's fine. Some employers will show up as ineligible, again, especially for-profit employers. If you get an ineligible result, but you really think your employer is eligible, they're a 501c3 or government, you should contact the Ombuds office at FSA, the Federal Student Aid Office within the Department of Education. Okay, so once you've determined whether your employers are eligible, you should confirm what kind of loans you have. Again, step 2, and whether you have to consolidate. This can be confusing. Many folks don't actually know the loan type they have. So to see all of your federal loans, you should log into your online account with studentaid.gov. Again, studentaid.gov is going to be your main place for your federal student loans. If you don't know your login information, you can reset it, or if you don't have login, you can set up an account by going to studentaid.gov. Once you log in, you'll land on your dashboard and you should see all of your loans listed there. Any that say direct in the name are direct loans, and any loans listed there that don't say direct, again, they might say FEL, they might say Perkins, are going to be not direct loans. And so you'll have to consolidate them for PSLF purposes. If you want a more granular list of your federal student loans, you can download your loan data, and you can see on the screen here where you do that. It says view details in a red box, and then download your aid data in another red box. What that'll look like once you download it is what you see in front of you. It's sort of a text file, and you'll be able to tell the type of loan you have. So here are 2 screenshots of that data report. At the top of each, where the arrows indicate, it says loan type, and that's where we see here FEL, F-F-E-L, that's that Federal Family Education Loan. One was already consolidated from a prior program. Now when you consolidate, it turns into a direct loan, and the other was not yet consolidated. So we know we're going to have to consolidate both of these to benefit from PSLF. Now on this report, you're going to see all of your historical loans. So there might be some on there that you've already paid off or have been consolidated, and so were paid off for that reason. Those will indicate a zero balance. You don't need to worry about the zero balance loans. It's just the ones that have a balance, because those are the ones that you would want to consolidate and get forgiven through PSLF and make sure they're eligible. Okay, so now, if you do have to consolidate something, if you have non-direct loans, what does that process look like? We're just going to show you how to do that. Again, studentaid.gov, sort of repetition here. So to consolidate your loans, you'll need to log in. You can hover over the Manage Loans in a red box at the top to get that menu to come up again. And then on the left, you'll see the other red box, Consolidate My Loans. You can select that. And then once you log in, it'll bring you into the application, the online application, where you can do everything. It'll then guide you through the steps that you'll need to take, which includes selecting which of the existing loans you want to bundle together and get refinanced through this consolidation process and replace with a new direct consolidation loan. It'll also, once you select that, it'll confirm for you the amount of your new loan and the interest rate. It uses a weighted interest rate. So if you had interest rates on your prior loans, the new loan will be a reflection of what those weights were. There is some risk when you consolidate. You might have benefits on your old loans that give you an interest rate reduction or something that you might be losing if you consolidate into a direct loan. But again, the purpose here for consolidation is to get you closer to loan forgiveness. So hopefully that's not an issue, or it's a worthwhile trade-off, but just to be aware. So through the consolidation process, again, it'll tell you which ones you want to consolidate, what the new rate and terms will be. You can then also select a payment plan and who the servicer will be for your new loan, and then you ultimately sign for it. It walks you through. You can see the green arrow at the top and some different steps on the application screenshot here. It really walks you through in a very helpful way. So there's actually, I want to take a second and give a specific tip around consolidation that's that is specific to the waiver only. And that's that if you have a mix of older and newer loans, some will be closer to 10 years worth of forgiveness than others. And if you consolidate all those loans together, the new consolidation loan, the way that it's being treated is it will have as much credit towards loan forgiveness as your oldest loan, as the loan that has the most credit that was being put into that new consolidation loan. So that means if you consolidate an older and a newer loan, like a FEL loan with a newer direct loan, that whole new loan will get forgiven on the timeline set by the old loan. So if you have undergraduate debt and graduate school debt, for example, and you consolidate them, your graduate school debt will get forgiven as well as along with your undergrad debt on the timeline of 10 years from your undergrad debt. So you might be able to consolidate and get your loans forgiven on a much faster pace than you anticipated for newer loans. And so that's the reason I bring this up, is because if you have a direct loan, you don't need to consolidate it for PSLF. It already qualifies, but there might be some benefits to consolidating direct loans with older loans so that they can get canceled via PSLF even faster than they would be by themselves. That's always going to be an individual. You have to look at what works for you, but that's just something to think about. Okay. So remember, for the regular PSLF program, you need to be enrolled in an IDR plan. During consolidation, you can select which payment plan you want to start out on with your new loan. So it makes sense for most people to select an IDR plan, and the application will tell you what the estimated payments will be for each of those plans. And again, those plans are income-based repayment, income contingent repayment, pay, and repay. And you can see on the screen in front of you, it'll give you some a whole list of the types, and you can see what your estimated payment should be and make a decision based on that. Finally, let's see how to certify employment. This is like the last step, right? So just like with confirming your employers, you're going to go to studentaid.gov, hover over Manage Loans, go to Public Service Loan Forgiveness in the drop-down menu, because we're going back into the PSLF help tool to do this. So you'll remember this step from earlier. It's the first step in the help tool. Get your employers, find them. We see that New York is an eligible example, add them, and then move on. The help tool will then help you as it navigates to the next step. It'll help you generate the form that you need. So it'll help you identify which loans you want to count and make sure that your employers are considered on the form. Once it gets you the form, you'll have to take it and get your employer to sign off on it. They're going to be signing off that you were in fact an employee and how long you worked there and that you were full-time, et cetera. Again, this form is called the PSLF form. It was formerly called the Employment Certification Form, or ECF form. More or less the same thing. So again, once you have it, you can print it through the PSLF help tool, have your employer sign it, and then there are instructions for how to submit it to the designated federal student loan servicer, who will process it and make sure that you get the maximum benefit and credit that you need. So really, everyone should submit a new form that reflects all of your work by October 31st, 2022. Even if you've done it before, if you haven't heard anything, it's worth doing it. We generally recommend that folks submit these forms on an annual basis anyway, but during this special waiver, you're really going to make sure you document your employment and file that form. So what's the actual process look like, right? Those are the steps, but what does PSLF generally look like? So this is the general process, but it applies during the waiver too. So FIA, which operates and does business as Fed Loan Servicing, is currently the exclusive servicer for public service loan forgiveness. So borrowers seeking PSLF file the PSLF form with FIA. The form will tell you exactly who to send it to and how to send it, but it's ultimately going to Fed Loan or FIA, this company. If you have a qualifying loan, they'll do a preliminary eligibility review, and if you do have a qualifying loan, they will then transfer your account to them if you weren't already with them for servicing, and then they'll run through all the other requirements like qualifying employment and qualifying payment plans, et cetera. Unfortunately, sometimes there are issues with people who find out too late that they have an issue. So this is why we recommend people file these forms on an annual basis, because if there is a problem, you can catch it quickly as opposed to waiting for 10 years, because there's no requirement that you file annual forms. You could wait the whole 10 years, file a form, and get your loans forgiven. But if something happened during that 10 years that made you ineligible, that's lost time traditionally that you could have fixed. During the waiver, again, this is different because the waiver is specifically to fix these issues that people were facing, the wrong loan type. So that shouldn't be as much of a problem, but all the more reason why folks should plan to file one of these forms this year during the waiver by the deadline. A lot of folks want to know how long does it take right now with the waiver. Also, it's hard to say exactly. The department has stated that they're doing PSLF cases on a rolling basis. Some people are hearing before others. There's not a public prioritization process. It's just they have a lot of paperwork to process right now, so it's not instantaneous. So folks should get it in as early as they can, and then they'll get their credit or their ultimate forgiveness all that much more early. One thing to say about this is you may have heard that Fed Loan Servicing is ending its contract with the Department of Education. This is correct. It was recently announced that another company will be taking over that contract. But I want to make this point that it's still okay to be working with Fed Loan. Like when they decide, as they do this transfer, they're not going to do this immediately. So you should continue to work with Fed Loan. And when they do the transfer, they'll transfer your loans over. If it ever makes sense to work with a new company, they'll update the forms to tell you to work with a new company instead of working with Fed Loan. That being said, it's always a good idea when there's a transfer happening, like we're going to have here, to keep your own copy of all your records. So if you are filing your forms, keep a copy for yourself. You should, if you're working with Fed Loan already, you should ask Fed Loan for a copy of your loan account. Go online, download your own, but then also ask them to send you a copy of your loan account. If something gets dropped or falls off during the transfer, you want to be able to document that you had it. You don't want to be in a position where you can't show that you had some eligible, credit that you're now being denied. Okay, so we're just wrapping up, and in a moment we'll start taking some questions and answering questions, but I want to flag, the important takeaways. Again, repetition is important here. So, essentially under this waiver, credit will be given for months during that were previously ineligible for any loan type and for any repayment plan, though some folks will have to change their loan type to benefit from this waiver. The deadline is October 31st of 2022 to consolidate and/or file your ECF form and certify, or your PSLF form and certify your employment. Everyone should plan to confirm their employer, confirm their loan type, consolidate their loans if necessary, either to get them to be direct loans, or if they have a mix of older and newer loans, if they want to get them all on the same timeline for sooner forgiveness, and submit your PSLF form to certify with the federal government. Finally, there's lots of moving pieces. Things happen, and if something isn't working for you, it's likely not working for someone else. So you should file a complaint if you experience any issues. You should file a complaint with the Consumer Financial Protection Bureau. You should file a complaint with the Department of Education ombudsperson and the Federal Student Aid Office. And you should file a complaint with your with the AG in Virginia, with your state AG. Again, no one is, there are very few unique outliers. If you're experiencing something, someone else is almost definitely experiencing that too. Okay, so that is the end of the presentation. Again, that was an overview of the PSLF program and of the waiver that's currently in place through October of this year. I know we got some questions in advance, and I will be taking some live, so turn it over to Justin and the representative to start that process.
Thank you so much, Winston. That was a great presentation. You actually answered some of my questions, but I'm just going to take 1 minute because I have Congresswoman's prerogative to ask you a couple questions that
Sure, please.
While we were talking. So in that EIN search at studentaid.gov, where you search for your previous employer by their EIN, that freaked me out a little bit if that's going to be a stopping point, because I know that everybody hangs on to their tax returns, their old tax returns for 15, 20 years, but just in case they don't, trying to get that EIN could be difficult. Is there a search by name function, or is it just you have to have the EIN?
There's not a search by name function. It is if you have a government employer, which is a huge amount of PSLF eligible folks. It is pretty easy to Google that government employer's EIN. That's why I used to be a New York State employee, so that was actually my screenshot that I used in the presentation, and I didn't know and didn't have that paperwork. So for government, it's usually pretty easy. But then also, I'd recommend, because if you're going to proceed, you're going to have to contact that HR office anyway to get them to sign the form. You can just contact them and say, here's what I'm doing. Can you tell me your EIN for the purpose of my confirming this?
Right. And I think for government employers, it would be a lot easier than some of these smaller nonprofits that may have ceased operations, or may have also, gone and been consolidated with another nonprofit. So
and for nonprofits, actually, sorry to interrupt, there are good websites out there like Charity Navigator or Morningstar, any of these that are already websites dedicated to helping people for transparency for nonprofits. And that often includes those nonprofits' own tax filings. So you can search your old nonprofit employer either by Google or on a website like Charity Navigator and then find their EIN there. But you're right that companies change, right? And there is an option on the form, the PSLF ECF form. There is an option that says, I couldn't contact my employer, and that might be because they closed, right? That happens. We live in a world where companies form and close. So it's not the end of the world if someone can't make that happen. They can check that little box, and then the Department of Education will try to verify on their end and work with the borrower to make sure they get the credit that they deserve.
And that's a great idea about checking Charity Navigator and those other open source information places where you can go. That's a great idea. Very quickly, you said that one of the things in this waiver is that if you have a gap in employment and gap in qualified employment, it won't count against you. Is that right? And that period will still count as, or if you have a period of employment where you're working for a for-profit employer, it would still qualify.
So the way that gaps in employment is one of the only consistent pieces in the PSLF program. So you always have to have had a qualifying employer to get credit for those months. But where the gaps come into place is if you ever leave employment with a qualified employer and come back, the clock doesn't set back to zero. You can just pick up where you left off, even with a different employer. I've often had people ask me, so I have to work for the same employer for 10 years? No, you just have to have 10 years worth of qualifying employers. But that has remained true for the regular program and for the current waiver. So that's why we sort of say in the 3 steps, see if your employer is eligible, because if you ever have a period when you have an ineligible employer, those months when you worked for them won't count towards 120.
Gotcha. Okay, that makes a lot of sense. So I was worried that people could, just work for like 2 months for a qualified employer and have the whole period count, but it sounds like that's not the case. So that's
correct.
Good.
No, yeah.
Okay, super. And then just for my own edification, what's the difference between a direct loan and an indirect loan?
So this is one of those examples where I wish we could all go back and use less confusing terminology. What direct loan means is this is some like Department of Education history is why this was named this way. Up until 2010, federal student loans were sort of counterintuitively issued by private lenders. They're federal loans that private banks issued, and those ones have names like FEL, FFEL, or Perkins, etc.
Right.
Direct loan means that it's coming directly from federal dollars. So that's why they call it a direct loan. It's being issued by the government itself, as opposed to being issued by a partner bank. So the indirect loans are the loans called FEL or Perkins, and direct loans are called that because starting in 2010, the government was essentially the bank itself issuing these loans.
Got it. And if you had a Perkins loan or a FEL loan or a Stafford loan or whatever, one of the ones from the olden days, like I had in my day, then you can consolidate those now if you still have them. Is that right?
That's exactly right. And then the power of the waiver we're in right now is you can consolidate them and not lose out. You can consolidate them without a penalty, whereas normally when you consolidate, you don't get credit for the work you did before the consolidation. You have to start from scratch in terms of 10 years of public service work.
Gotcha. That's good. That's very helpful. Great. Thank you. I have some other questions, but I'm going to defer to the questions that were submitted in advance. So Justin, take it away.
Thanks so much. And we actually got a ton of questions answered during the presentation. So some will reiterate just to be clear, but I think we got a lot answered. So first one here, as a healthcare provider who've been at the forefront of fighting pandemic for almost 2 years, why is it that doctors, nurses, and healthcare providers may not count as public service in terms of the loan forgiveness program?
So it's a great question and it's a somewhat complicated answer. But first, I'll say they very well might count, right? So all those important workers, healthcare providers may count. It depends on who they work for. So the Public Service Loan Forgiveness Program asks, is your employer a public service qualified employer? And the way that in healthcare plays out mainly is the question of, do you work for a public hospital, a private nonprofit hospital? Do you work for a private for-profit health practice? Do you work for a placement agency? And so you're doing, you're working alongside someone in a hospital who's employed directly by the hospital, but you're there because a placement agency placed you there, and your employer is technically that agency. So that's what determines who qualifies, is who your actual employer is, who is issuing you your paycheck, basically. So many, if not most, public health workers do, in fact, qualify for public service loan forgiveness. Again, if they work for a government organization or for a nonprofit organization, specifically 501c3s. But there are some public health workers who work for for-profit companies, and they are currently ineligible. I will say, separate from this waiver, there is a whole rulemaking process going on with the Department of Education right now to figure out what permanent changes, this is temporary currently, what permanent changes they want to make to the PSLF program. And one of the questions there is, can we allow people who are fundamentally doing public service work but happen to have a for-profit employer, can we give them credit? A lot of folks, including my organization, are fighting for that and saying, yes, there's no different. They do this important work every day. That was the program's intent. But currently the way it works under the current rules, which might change, is that if your employer is not a qualifying government nonprofit 501c3, you are ineligible. But many public health workers are, and doctors and nurses are eligible if they work for a qualifying employer.
So thinking about what we're dealing with now with the pandemic, so if somebody works for a contract nursing company, and it's a for-profit company, even if they go and work in a public hospital or at a clinic or something like that, one of these test centers,
yeah,
that work may not qualify because it's based on the employer. Is that correct? That's
exactly right. And I think you're bringing up really good examples, whether it's CityMD or these other sort of urgent care programs that we see out on Main Street, right? Which have been a part of the testing infrastructure in many places. Those are often for-profit companies providing critical public health services, and they would not currently qualify. So that's exactly right. And that's why there's a big push to have this be changed permanently with the Department of Education.
Well, good. And I hope it is. So a couple other quick questions based on that. So we have, for example, our two big hospitals here in Loudoun County where I live. We have Inova and we have HCA, and Inova is a not-for-profit and HCA is a for-profit, I guess. So doing the exact same job, if you're an ER nurse or an ER doctor in one, you may not qualify, but if you're an ER doctor or an ER nurse in the other, you might. Is that my understanding?
Yeah, without knowing the specifics of each of the buildings, that conceptually is correct, right? And also hospitals can be complicated because, as we know from the surprise medical billing world, not everyone who works in a hospital is employed by that hospital, right? There's all sorts of complicated relationships there. But generally speaking, what you just said is exactly correct.
Okay. And are there other federal programs that might be available for healthcare workers to help forgive their loans, even if they do work for non-qualified employers, if they're in an area of great need or something like that?
Yeah, there are certainly federal, and there are also some state-based programs. They tend to be niche and specific to certain teachers and healthcare, as you suggested. So I'd recommend if folks have questions about if there are programs that qualify for them, if they go to that studentaid.gov, again, that should be your one-stop shop for your federal student loans. Under the drop downs for manage your loans, there are all sorts of forgiveness programs listed there. And I'd encourage folks who are interested in their options in addition to PSLF to go look at those there. They're sort of various. I would say there are often more at the state level just because the federal government has to administer broad programs, and so they only have a few of them. But studentaid.gov will be a good place to start that process.
And I'll also go ahead and commit my my caseworkers to take a look at this and get back to whoever submitted that question about whether there are some federal programs that might be available as well. So there you go, team. So you've been told that you have another assignment. So thanks.
We had a couple questions about the timeline for hearing back, which I think you kind of touched on. But one in particular says that they recently faxed their employer certification form, but they know they're not in the right repayment plan. Should they wait for a response before changing plans?
So during the waiver, again, repayment plan doesn't matter. So there shouldn't be a ton of urgency through October of this year to change your repayment plan if you are trying to benefit from the waiver. What I will say, though, without knowing, again, the particularities of this borrower's circumstances and what kind of loans they have or whether they're also consolidating, is there's no changing your repayment plan won't have any adverse effect, right? So if you know it's something you're going to have to do, I would recommend you do it sooner than later, especially because there have been, the postponing of repayment resuming from February to May, and this question of servicers transferring, and there's just a lot of moving deadlines. So I would say if you have the ability to do something soon that you're going to have to do anyway, it doesn't hurt to do that. But in terms of the waiver will just look at whether you are not in default, deferment, or forbearance. It doesn't look at the actual payment plan itself, so that shouldn't be urgent. But I would recommend folks get on the right plan if they have not yet done that.
And based on that, Winston, I do have another question about repayment, which I was wondering, some employers, because they don't have the same kind of salary and benefits, the federal government. So in the House of Representatives, as a part of our MRA, we have a certain amount of money that we can dole out to people working in the office, in our congressional offices, for student loan repayment. Mm-hmm. Does the source of funds matter? Does it have to come from the borrower themselves? But if they have an employer who helps defray those expenses, does that still qualify if they're on the IDL or the income-based, I guess, the IBL?
Yeah, that's a great program. That's a great question that I will circle back to your team on. I want to say that the source does not matter whether it's an employer or you have parents helping you make your payments, or children helping their parents. Increasingly, we're seeing this make payments, older borrowers. It's a matter of whether the payment was made on time, generally. Again, not for the waiver, but generally speaking. But that's a great question. We're seeing more and more of these employer-based loan support programs as a benefit. So there is an answer. I'm not quite sure, but we'll circle back with your team on that.
Okay, great. Thank you so much. Justin, next question.
Another one we got from the live chat asks, the Department of Education indicated in October that for federal employees, they would be able to automatically verify employment. Is that still the case?
It's a great question. So they did make that announcement. So what the announcement was for other folks who are watching is that if you're a federal employee, they're going to work with OPM, Office of Personnel Management, and the Department of Defense for folks in the military, I should say, because those are two offices that have employment records, and then they're going to match those records against the Department of Education's loan records and figure out who's a federal employee that also has federal student loans, right? Because that's essentially what you need for PSLF. That's essentially what the PSLF form does for the federal government is it tells them who has the right job. So with the federal government, they have access to federal employment records, and they're going to do that. The federal government has indicated some interest in doing that with other governments and with nonprofit employers also, but they committed to doing this themselves for federal employment. There's not a specific timeline associated with that. So I would say with respect to benefiting from the waiver, everyone should certify their own employment using the PSLF ECF form. So it's great that going forward, there will be this automatic data matching, but because of the time-limited, time-sensitive nature of this waiver, we don't want anyone to miss out. It does not hurt to sort of be doubly certified, if that makes sense, to have two versions of the same information going in. So just to make sure everyone gets in on time, we would recommend everyone file their own PSLF form.
That's good advice, definitely. I mean, I know that you phrased it as, yes, the federal government did announce that they're doing that, but I guess the reality of making it happen is a whole nother story. So I would say, don't count on them to get it done for you. Go ahead and file as well.
That's right. Yeah.
Another question we have asks, I was told years ago that I did not qualify for the program. With the new program, will I get any credit for payments made under the wrong repayment plan?
Yes, and that's what's so exciting about this plan. Again, without knowing this person's particular circumstances, generally speaking, if you were in the wrong plan for this 1 year, if you put in your paperwork and make sure you have the right loan type, you will get credit for any month that you were in repayment. Doesn't matter what kind of plan you were in repayment, as long as you weren't in forbearance deferment, which are two types of ways you can pause your monthly payment. If you call and say, I need a couple months to catch up, can I defer or forbear my payments? So as long as you weren't in one of those two plans or in default, it doesn't matter for the purpose of the waiver what repayment plan you are in. This is the purpose of the waiver, is to help people exactly like this borrower who, for whatever reason, weren't in the right plan, no one told them, etc. They can now get credit and then should make sure going forward they are in the right plan.
Great, thank you. A couple questions here about loan types being eligible for forgiveness, which you may have touched on, but just to kind of reiterate, for folks who have FFEL loans, if they consolidated those into one FFEL, can they transfer them to direct loans so they can qualify for PSLF? And then another question here, are CTE subjects, so career technical education, on the forgiveness list if you took out loans for those sorts of programs?
Question.
Yeah, all great questions. So on the first part, yes, you can consolidate your FFEL consolidation loans into a direct loan. Again, the purpose of this waiver is to allow for people who have those older loan types to do exactly that. So I would encourage anyone to go do step 2, I guess, of our recommended list and check what kind of loan types you have and consolidate if necessary. But if you want to benefit and you don't have direct loans, you will have to consolidate, right? So you should do that. And actually on timelines, I should mention consolidation can take up to a month. You don't have to wait to then do the employment certification just because of timing and how they're processing things. You can do it all sort of around the same time. There's still plenty of time between now and October, but just as a FYI. For the CTE question, and I think there are some other questions we got into about timing of education and loans. The bottom line is for PSLF, it doesn't really look at the degree you got or didn't get. It looks at whether you have federal loans and what kind of work you do now. So regardless of your background or the school you went to, if your loans are federal, and then you make sure they're in the right type of loan, and you have past or current employment with a qualifying employer, that's really all the recipe is for PSLF. So the kind of school you went to isn't really relevant for this program. There are different considerations for different types of schools for other sort of loan programs in the federal government, payment and cancellation, but not for public service loan forgiveness.
A couple related questions actually on eligibility. First, this individual asks, I have an outstanding student loan, but never finished college and has never been able to start payments back. Do I qualify for forgiveness? And then one other one, I'm an instructional assistant for a public school system, and I'm paying back my son's student loan. Am I eligible for the program?
So for the first one, it doesn't really matter where you went to school. If you finished school, it's a question of, do you have federal student loans? Do you have the right kind of job? And during the waiver period, were the loans in repayment, right? As opposed to default, forbearance, or deferment. So for that individual, whether they finish their degree or not shouldn't really matter as long as they still have federal student loan debt and they have the right kind of job and can then fill out, the forms and take the steps they need to take during this time frame, during the waiver specifically. For the second person, if you are helping someone else pay their loans, you yourself, it's the legal loan borrower, right, who has to have all the qualifications. So in an instance where a parent is helping their child pay off the child's loans, that child has to qualify for PSLF. They have to have the qualifying job. They have to have the federal loans, because remember, PSLF is only federal loans. I'll talk about that in a moment. But there is a federal loan program called Parent Plus, which parents can take out for their children or grandchildren. The Parent Plus loans, and in which case, it's the parent who's the borrower, right? These are not the children or grandchildren's loans. These are the parents' loans legally and practically, and they're responsible for payments. Parent Plus loans can qualify for public service loan forgiveness. You might have to consolidate it to get access to more of those income-driven repayment plans, but you can make it work if you have a Parent Plus loan. Parent Plus loans, however, were not included in this waiver. The waiver essentially says it doesn't matter what kind of loan type you have, we'll give you credit, consolidate, except Parent Plus loans. For whatever reason, they didn't include Parent Plus loans in this waiver. But what you can do for any parent who has a Parent Plus loans and any of their own loans from their own education, if you consolidate those and then you had eligible work during the time frame of your own loans for your own education that will bring your new loan into forgiveness and will get you the 120 payments, your Parent Plus loans that were bundled in there together will also be forgiven. They're not going to separate them back out and only cancel some of the underlying loans that were consolidated together. So I know that sounds a little bit confusing, but it goes to the same point I made during the presentation about if you bundle older and newer loans, FFEL and direct loans, even though the direct loan was itself eligible, you can get all your loans forgiven on a faster timeline than any one of them might have been. Same with Parent Plus. If you consolidate Parent Plus loans with other loans you have that are going to benefit from the waiver, the Parent Plus loans will sort of derivatively, as a secondary beneficiary, benefit from those other loans. But again, it's only for your own loans. So someone can only benefit from public service loan forgiveness for their own loans that they took out and are under their name.
Great, thank you. We have a couple consolidation questions, kind of two categories here. First, for folks who consolidated prior to this kind of special waiver period, how does eligibility work with them now? And then also similarly, we had a question in the live comments about someone who consolidated in December of 2021, but who's getting material saying that because they're consolidated, their payments had been reset. Could that just be kind of a technical error there?
Yeah, so all great questions. So the first thing I'm going to say actually is to front end that is that consolidation was correctly used in this term, but it is a very specific term for federal government loans consolidated into another federal government. I compared it to a refinance, but I just want to be very clear. If you at any point took your federal loans and refinanced them to get a better rate on the private market, you now have private loans. And unfortunately, those are not eligible for public service loan forgiveness, nor can you undo that process. So just to be very clear, that PSLF is only for federal loans. And if you've, consolidated, refinance them on the private market, that unfortunately it is what it is. For the question, yes, if you already consolidated loans previously, the waiver will still look back prior to the consolidation. So if you consolidated in 2015, the waiver will allow you to get credit from 2007 to 2015 for the underlying original loans, and then again moving forward 2015 for the new loan itself. And then for the borrower who got that letter, unfortunately there have been a lot of misleading letters around timelines and eligibility. The government announces something and then it has taken a couple of weeks lag time for the private companies that administer these programs, the servicers, to update their materials. So that person in particular should be fine. I will say they should keep all their records, right? And if things don't resolve themselves very soon, if they're not seeing a change to their account soon, they should file a complaint with the FSA ombudsperson or with the CFPB or their attorney general, because they still have plenty of time to get it fixed before October in their case. But I have faith that that's what's going to happen, but keep records, always be vigilant. And then if in a couple of weeks they don't see things get cleared up, they should file a complaint.
Perfect. Thank you so much. And since
before we get to anything else, because I'm still so irritated about the whole consolidation where you take one public, or you take 8 public loans and then put in one private, or consolidate or refinance on the private market and end up end up not qualifying for anything. Is it, now just wearing my legislator hat for a minute, is there any kind of warning that they have to provide, that those consolidation folks have to actually give to borrowers to tell them you could lose your qualification for all of these federal programs if you consolidate these loans into the private market or go through this process?
Yeah, so those, that would be a warning coming from the private lender who's doing the refinancing. And I'd have to double check. There's all sorts of consumer disclosures that come with consumer lending, and I don't know about something specific about eligibility for this or other programs, but that's certainly something I can circle back with your team on. And again, your caseworkers we can.
I know that there's a lot of boilerplate stuff that people get, and they just check it and sign it. But this is something I think that warrants like some serious discussion and everything. And I just feel like the private lenders don't always have an incentive to make people aware of all of the possible consequences of the action.
Yeah, that's right. And it's a good opportunity to tell folks to look out for scammers, right? Whenever there's an exciting new government program, that's like a bat signal for scammers to come in, because then they'll use the language of that program to rip you off, basically. So you could have shady private lenders come in and say, hey, you need to refinance for this program. See, it says you have to consolidate, do it with us and you'll be good to go. And then to your point, Representative, they're not being authentic and not being candid about what that actually means. So there are some folks who aren't being, unlawful. They just are doing their business, and maybe they didn't disclose something because they weren't required to. And then there are some folks who are really preying on this. So it's a slightly different, but a good opportunity to make that point for folks to be careful and to always work through the federal government if you're doing a consolidation with the federal government.
Good. Thank you, Winston. I'm sorry, Justin, I think I interrupted. I don't know. Are we running out of
time? No, that's an important question. Thanks, Congresswoman. And since we are running out of time here, two questions kind of wrap us up. First, what can individuals who are pursuing PSLF do to make the process go easier and more smoothly to guarantee they can continue to qualify for PSLF? And kind of piggybacking on that, is there a resource available to help someone answer kind of questions about their individual situations?
Yeah, great question. So in terms of what they can do to make the process easier for themselves, always keep copies of your own records, right? Be a good record keeper for yourself. That's good in all consumer finance instances. In general, for PSLF, you should file your forms annually, right? So you can just identify quickly any problem. For the waiver, which is only a year, right? Again, it's sort of all of that together. It's act quickly, do all the steps we talked about, act quickly, and then document each of the steps you made. Because if something does go wrong later, you want to be able to show either by the deadline or if necessary afterwards, and then we can call on the government to sort of fix the problem. For this shorter time period, it's just really being vigilant and making sure you run through these steps and make sure you get the benefit that is available to you. But generally speaking, the best thing to do is to file your form every year so that you can get an indication if something's wrong. In terms of resources, studentaid.gov, the Public Service Loan Forgiveness page, is pretty good. Our organization, the Student Borrower Protection Center, has a website, protectborrowers.org/PSLF. So that's protectborrowers.org/PSLF, where we have a lot of information about the waiver, including tutorial videos, short videos about each step of the way that you can watch and listen to. And that's a resource to help guide folks through this. In terms of needing assistance, in Virginia, you have a student loan ombudsperson at the higher ed, SCHEV, SCHEV. So you can Google student loan ombudsperson Virginia, and you should be able to go there and file complaints or look for resources for assistance here in the Commonwealth.
That's great. And Justin, are we able to link to any of these things on our website? I also don't know what the limitations are about linking to other.
We can absolutely send you the student aid government website. We'll post that in the comment section of both of these live streams for folks who tune in later.
Awesome. Thank you. Wonderful. Well, I think with that, we need to wrap up. Winston, this was so informative. Thank you so much. I mean, you've answered all of my questions, and I'm really, really glad that we've got this program up and running. I hope that everybody else found it informative as well and a good jumping off point with some more resources. So thank you so much for joining us today and for everything that you're doing to protect borrowers.
Thank you for creating this space. It's really important and a really huge service to your constituents. So thank you, and thank you for inviting me.
Glad to do it. Take care, everybody. Stay safe and good luck.